Hello everyone, welcome to my channel Ecometry. So hope everyone is fine. So in the previous class, we have discussed about the definitions, major definitions that we will use across the syllabus, and I have given you some case studies that you need to solve. I hope everyone has tried to solve that case studies. So let's discuss about those case studies first. So in the first case study, uh, there is one bright traders. A person wanted to start their business from 1st April, and they have incurred some sort of transaction in which we have to identify what is asset, what is liability, what is capital. All right. So owner first point is owner introduced 5 lakh cash into the business. So it is a share capital. It is a equity portion because owner has invested some amount of money to start the business. Next one is purchased furniture worth 80,000 and paid by the check. So owner has purchased some furniture to start the business of 80,000. So it is an asset because that furniture help them to run their operation smoothly, and they have already paid the amount. So if they have not paid the amount, it is a sundry creditor for them. But since they have already cleared all the payments, then there is no liability in this case, but it is a asset. Furniture is a asset. Next is purchase goods worth 1,20,000 on credit from RIA suppliers. So goods purchased, it is a inventory because they have purchased goods to further sale, or they can use that goods to produce something. So it is a inventory, and they have purchased these goods on a credit. So it means they have not paid the supplier, they have to pay it, right? So it is a sundry creditors from for the bright traders. Next is sold goods worth 1,50,000 on credit to Ankit Enterprises. So they have made a sale to Ankit. So it is a revenue for them, but they have not received the payment. They have allowed the credit to the Ankit Enterprises. So it is a sundry debtors or trade receivable, or we can say account receivable. Okay. Next one is paid insurance premium 12,000 for the 12 months. So they have paid insurance premium for their business. So it is an expense for them, but they have paid for the 12 months. So it is a prepaid expense. So prepaid expense is a asset. All right. Paid rent 20,000. But so paid rent is a expense. But March rent of 20,000, it is still unpaid. This portion is a outstanding liability because they have to pay it. Okay. If you able to recall asset, what is asset? Asset is a resource that you want, or you have a control on that, through you are able to generate some economic benefits, or we can say revenue. And what is liability, which on which we have to pay, we are under obligation to repay something or some money, or we owe to someone. So in that case, we have availed the services from the supplier, but we have not cleared them. So this is our liability. Depreciation on furniture is 10% per annum. So it is, depreciation is also an expense. So let's talk about the next one. Sunshine Coaching Center has the following financial information for the June. First, they have collected the coaching fees of around 70,000. So it is their revenue. It is their operating income, because what is the primary purpose of their business is they are providing the tuitions, they are providing the coaching. So it is their we can say that revenue or sale of services. Next is salary of 30,000 is payable but not yet paid. So salary is an expense for them, and since they have not cleared the payment, it is an outstanding expense. Next is they have purchased the computer for 60,000. It is an asset because even like we discussed in the last class also, like furniture, laptop, computers, AC, refrigerator, land and building, any other type of the machinery is always an asset for us until now. Okay. And they have paid 50% and balance they have to pay. So that whatever they have not paid, it is a sundry creditor for them. Received 20,000 from the old debtors. So it means they have to receive some money in the respect of the coaching classes which they have given earlier, and that time they have not received the money, and later on they have received the money. So it means in the books of account they must have some debtor balance which they have to collect from the customer. And right now it will be reduced because they have already received the money from the debtor. Electricity bill of 5,000 is paid. So what is electricity bill? It is an expense for them. Advance rent of 15,000 is paid for the July. Rent is an expense, and since they have paid the rent in advance, it is a prepaid expense. Okay, and prepaid expense is an asset for us. Depreciation on computer. So depreciation. So on computer also we have to charge the depreciation, because a computer is a sort of asset whose value will be decreased every year, right? And it is an expense in the P&L account. Next case study is Alpha Manufacturing Private Limited shares the following data for the quarter. So first is raw material stock purchase 2 lakh on credit. So raw material purchases inventory, and they have purchased the inventory on the credit. It is a sundry creditor. So don't confuse with like that, because every transaction is always have a two-sided impact in your books. We can discuss this later on in the further classes, like how you need to record. But the main agenda of this class to understand in transactions how you need to evaluate or identify what is liability, what is asset. Okay. Second one is sold finished goods for the 4 lakh, 1 lakh yet to be received. First of all, what they did, they have made a sale of 1 lakh, 4 lakh, sorry. So that is their revenue. Next is they have made the sale of 4 lakh, but 1 lakh they have not received. So that is the sundry debtors for them. Because what we learned in this for the sundry debtor, if we made any sale and that sale we have made on the credit, that is the sundry debtors. So in this case, 1 lakh is a sundry debtors for us. Next is paid wages 90,000, and 10,000 is still outstanding. Wages is a expense for us, and 10,000 we have not paid yet. It is a expense. Sorry, it is a payable. Like it is a liability. Wage payable. Next is machinery worth 10 lakh purchased. So we have purchased a machinery of 10 lakh. So it is a asset. Only 2 lakh we have paid now. So out of the 10 lakh we have just cleared the payment of 2 lakh. Rest 8 lakh we have to pay. So that is a sundry creditor for us, because we have to release the payment, right? Depreciation on machinery. So as we discussed earlier, like in the previous example also and in the other also, like most of the plant and machinery will always depreciate, because their value will not be their value will always be decreased, and they will not able to provide the same level of output, or they will not able to work on the same efficiency level, since we have hence we have to provide hence to be charge the depreciation on that. Next is paid in advance of 30,000 to the supplier for the next consignment. So in this point, what we did, like we have already paid the advance to the supplier, so that they can give us goods or raw material, whatever we need. So this is an asset for us, because we have not availed the services yet, and we already given the payment to them. Received in advance of 40,000 from a customer. So in advance we have received 40,000 which we have from a customer, against which we have to provide the services. We have not provided them yet. So it is a liability for us, because we have to provide the services to them. So under the liability, it is not something that every time we have to pay. So whenever we are under a obligation, it is a liability. Obligation can be of any type. Either we have to repay someone, or we have to pay something, or either we have to provide the services to them. So whenever we are under a obligation, it is a liability. Okay. And bank balance is 2,20,000. So you know that it is a asset. Share capital introduced this quarter, 5 lakh. It is also a it is a very clear, straightforward share capital. It is a equity. Interest on loan. So interest on loan is an expense, but it is unpaid. So it is a our outstanding expense, because we are under obligation to we have to pay them. All right. I hope everyone is able to understand these case studies.